If you trade F&O in India, you need to hear this. SEBI just dropped a massive report on futures and options, analyzed the profitability and losses the retail investors makes due to F&O, and the numbers are absolutely terrifying. From 2022 to 2024, 93% of Indian retail investors suffered a combined net loss of 1,81,383 crores in F&O segment. Yes, that's true, 1.8 lakh crores. I can't even count the numbers on my fingers. And from 2024 to 2025, 91% of the traders made a total loss of 1.05 lakh crores. That means 9 out of 10 people clicking on that call or put option are literally just burning the cash. The most tragic part is that the wealth is vanishing from the middle class homes. But who exactly is losing this money? This is where it gets really dark. A majority of loss-making traders were under the age of 30. And the average loss per trader was around 2 lakhs. This doesn't end here. The top 3 to 4% elite loss makers made a devastating loss of 28 lakhs per trader. And the average income of these traders were only 5 lakh per year. Just think, top loss making traders just burn more than 5 years of their net earnings. Isn't this strange? People who can least afford to lose capital are using options like a lottery ticket, hoping for that one explosive move. 30s are the prime time to earn and build capital, and people are exactly doing the opposite. Forget the savings, they are just burning their hard-earned money. That's greed winning over logic. If retail is losing 1.8 lakh crore, who is making the money? While retail individuals collectively lost 1.8 lakh crores, institutional proprietary traders and foreign portfolio investors (FPIs) booked thousands of crores in gross profits. Yeah, they just made 33,000 crore and 28,000 crores respectively in 2024 alone. But they aren't sitting there drawing trend lines on a chart like you. They are using derivatives for hedging. Let us see what is hedging. Suppose a mutual fund owns 1000 crores worth of stocks. The fund manager fears that the market would crash in next month. So instead of selling the stocks, what he does is he keeps the stocks but short the nifty futures. Now if the market falls, stock portfolio loses money, but the future positions gains money. And if the market gains, the equity portfolio gains money, but the future position loses money. But in both the cases, losses are partially offset. That's hedging. So if you don't have a large cash portfolio that you are trying to protect against a market crash, you probably have no fundamental business buying naked options. Derivatives were created to hedge risk, not to gamble on weekly expiries. Now the F&O fan club would argue that okay, we agree 93% of traders loses money, but what about the remaining 7%? They would be printing money, right? No. The data tells a different story. According to the report, out of the 7.2 traders, only 1% of the retail traders managed to take home a net profit exceeding 1 lakh after deducting the transaction costs. The remaining 6.2% of profitable traders made tiny net returns that were largely eaten alive by the fees or the transaction cost, and they barely scraped with few thousands of rupees across 3 whole years of stress. That's because people who actually made a profit lost about 22% of their gross profits to transaction cost. Between 2022 and 2024, retail traders paid over 50,000 crores just in fees. Half of that just went directly straight to the brokerage houses. So the houses always wins, brokers get paid whether your trade shoots to the moon or crashes to zero. The data doesn't lie. The current retail approach to F&O is financial suicide. Ask yourself honestly, do you really think you are a part of that elite 1% who actually made money? If not, here are some data-driven solutions to surviving this market. Step 1. Start with paper trading. Before you risk a single rupee of your real capital, download a paper trading app. There are plenty of platforms that lets you trade with fake money but using real live market data. Use it for 6 months or a year. If you really can't make money with the fake paper money, you will definitely lose your real money. So learn the truth this way, not the hard way. Second is of course pivot to cash markets and equity delivery. You like volatility, you like finding stocks and buying them, do it in the cash market. If you buy a fundamentally strong stock and it drops 10%, you can hold it. You still own the asset. But if you buy an option and it drops, theta decay will eat you alive as it expires worthless. You already know time is your friend in investing and it is your ultimate enemy in options. Third option is if you really want to trade in F&O, restrict your sizing. The SEBI report clearly shows that the more you trade, the more you lose. High value traders had a 95% loss rate. Limit your F&O exposure to a maximum of 2 to 5% of your total capital. Treat it as a risk capital that you are fully prepared to lose. Do not put your hard-earned savings in F&O, just put the money in F&O that you are ready to lose, because statistically you will. The market is an incredible wealth creation machine, but only if you play the right game. Build real wealth by owning great businesses, not by renting expiring contracts. If this data opened your eyes, hit the like button and share it with the F&O traders so this video reaches more retail traders before they blow up their accounts. Subscribe for more data driven market truths. See you in the next one. Until then, be value smart.